to buy physical silver. Also, John Stevenson, who is a fund manager in Canada. We see him on the Canadian Business Channel all the time. He is an author of a few books. He said silver is way undervalued compared with gold. He was on CNBC. He was interviewed. He says, for my money, the trade of the decade will be in silver. Gold was the best investment over the last decade, but in the future, silver will be the go-to investment for investors looking to ride out the current storms in the global economy. It is a very long article, and you can read it free of charge in our newsletter. It was interesting, Goldcore out of Ireland said this week that poor man's gold, silver, is set for a record nominal quarterly close, which would be bullish technically, and silver would be set up for the target of a psychological resistance price of $40 and then the nominal high of $50.35. Silver's quarterly record close was $32.20 on December 31, 1979, so we're well above that as the quarter closed out yesterday. Well, silver is up roughly 20% this year and is heading for a ninth straight quarterly advance. Its fundamentals remain very sound. With gold above its nominal record of a record high of in 1980, poor man's gold continues to be seen as an offering better value for investors. To the masses in India, China, and Asia, silver is the cheap alternative to gold and an attractive store of value and hedge against inflation and debasement of paper currencies. Increasing global investment and industrial demand in the very small and finite silver bullion market is a recipe for higher prices. Thus, as we have long asserted, the gold-silver ratio is likely to revert to its long-term average of 16-1. A return to the ratio of 16-1 is likely due to basic supply and demand and the geological fact that there are 16 parts of silver for every 1 part of gold in the Earth's crust. The fact that the huge amount of silver has been used in industrial applications and consumer items since the Industrial Revolution of the 19th century makes a return to 16-1 likely in the long term. They say $40 silver may offer psychological resistance and could see profit-taking, but those buying silver are in strong hands who rightly believe that silver will likely reach the 1980 nominal high of $50. Real silver bulls believe silver may reach an inflation-adjusted high of $150 an ounce. And they go on to say a tiny majority of retail investors have begun to look at silver, but it remains largely the preserve of smart money, a very small amount of hard money advocates in the U.S. and a store of value buyers in Asia. Much of the price gains seen recently may be due to banks closing out some of their massive concentration of short positions, which are being investigated by the CFTC. That according to Goldcore. But Harold, a lot of people, you know, as we touched on last week, a lot of people are not involved in this market, and we are far, far from a bubble. As I touched on that story last week about Larry Berman, who does a show on the Canadian Business Channel, being at a technical analyst conference in the United States and asking who actually owns silver, and only a few people put up their hands. It just shows us that we have a long, long way to go in this bull market in precious metals.
You bet. But we don't really need the general public to be in the market in order for silver to hit these prices because it's a different world. You know, back in 79 and 80 and during the 70s, you did have the general public jump in, but like always, they jump in at the wrong time. You know, they didn't buy silver at $1.25. They didn't buy it at $3, $4, $5, and $10. They started buying silver at $35. In actual fact, you know, when silver prices get high, what people tend to do is they tend to sell their silver. They sell their silver cutlery and their tea sets and things like that. But basically, I think it's a different market in this sense. I'm very proud of the fact that we brought this show on 10 years ago, and our clients were able to buy silver at decent prices. You know, but the fact is that it's these hedge funds and mutual funds and other avenues and the ETFs that are pushing up the price of silver right now, and that's where most of the money is going into. So the bottom line is that we've been recommending this market for a long time. The market has done exactly what we figured it would do, and the best is by far yet to come. And I agree that I think that silver at this level is still very inexpensive, and I do believe that we are going to see substantially higher prices, and we will see silver in the triple digits. There are shortages of it. The fact is that as an industrial metal, it's in great demand, and obviously for investment purposes to fight inflation and world economic problems, it's one of the best investments you can make. So all in all, we're very comfortable with the price of silver right now. Again, I feel the price of the resistance is at $38, not $40. But $38 is the major resistance. Then we will see resistance at $41.50, and then we will see major resistance when the market tries to break 50. But all in all, everything is lining up beautifully. Again, we are going to see extreme inflation, and I can't urge you enough to understand what the future is going to look like, and this is the foreseeable near future. The prices are skyrocketing in certain things that we use every single day, food and oil. And as those prices go substantially higher, it's going to cause problems around the world because you've got, several poor nations where people are starving and now they can't afford to eat at all because of obviously the extreme high prices of food. So this is going to be a major issue. You're starting to see in England that they're starting to riot. They started rioting over the high cost of education, and now about what the government is doing and the high price of food and all that. So this is going to happen worldwide. We are going to go into the next 5 years, and it is going to be the most extreme time that most of us have ever seen in our lifetime. We're sitting back right now and everything is still looking okay. We're still, going to restaurants, and restaurants are busy and people are still going out and doing their thing. But the bottom line is the next 5 years are going to really catch people by surprise. That's why it's extremely important that you don't fall into the trap that most people are falling into. Don't just sit back and say, well, there's very little that I can do about this, and I'm in the same group as everybody else, misery loves company type of thing. No, you've got to be different. You've got to go and look for the alternative investments, the ones that are going to protect you against the onslaught of what's going to come. I'm a firm believer in insurance, and most of us are. You buy insurance on your health, on your life, on your home, on your car, and on everything like that. Get insurance on your financials, because that's what we need to survive. And again, just by converting some of your paper assets into hard assets, you're going to be able to sleep a lot better knowing that you've got something working for you that's working against, again, stocks and paper assets that I still believe is going to make a major tumble. So again, I'm a firm believer in the markets. I think that silver is going to absolutely skyrocket, and again, I think it's still a bargain at these prices.
The telephone number to invest in precious metals, learn more, get our free weekly newsletter, 1-866-623-2002. 1-866-623-2002. The website is wwpmc.com, wwpmc.com. If you're not receiving our free weekly newsletter, it is a must-read every week. It's a companion to our radio show. We send it out free of charge via email. In our newsletter this week, we have some amazing charts. Our charts of the week, also quotes and quick hits, information on diamonds, gold, silver, the sovereign debt crisis, debt and deficit crisis in the United States. Quantitative easing 2, will it lead to quantitative easing 3? Mark Faber believes so. Also inflation, commodities, currency, Japan, the oil market, and the real estate market. If you'd like to receive our newsletter free of charge, call us at 1-866-623-2002 and learn more about investing in precious metals. We are going to come back and talk about investing in diamonds. And it was a good week for diamonds. We'll talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. No fooling, we are taping the show on April the 1st, 2011 at 9:09 Mountain Time, 11:09 Eastern Time. Our show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you listen at Edmonton, next week we will be on at 10:30 in the morning, just prior to the final Oilers game of the regular season. And if you ever miss a show, Harold's website is HESradio.com, HESradio.com. You can go there and listen to archive shows. We'll be on next week in Edmonton at 10:30 in the morning. One of the stories that we have in our newsletter under currency, Howard Davidovitz, and he actually was interviewed this week, and he says the U.S. dollar has never been at greater risk. There's a distinct possibility the U.S. stock market could plunge as much as 6,000 points if the U.S. continues to rack up record amounts of debt, causing the dollar to lose its reserve status. The dollar has never been at a greater risk. And in fact, he was asked the question, what's an investor to do in this scenario? And he said, buy hard assets. And he was actually saying people should own physical gold, silver, and diamonds. And Richard Russell, as Harold talked about a little earlier, saying the exact same thing. Harold, I think people are coming around to your philosophy that you've been talking to us about for the last over 5 years, that have some gold, silver, and people must look at diamonds, because as we get into inflationary scenarios, hard assets like diamonds will do very, very well.
You bet, you bet. In fact, I've got some very, very exciting news. And again, the fortunate thing is that I traded the markets back in the 70s and 80s. So I've been through this before. I saw the run up in gold and silver happen, and I traded it. And I'm the type of person that keeps very accurate notes. So I keep ledgers and diaries on what happens in these markets, just in case again they happen again. So back in the 70s, I was trading the metals, and I was in the diamond market, and I saw what happened. And the fact is that in 1979 and 80, when the inflationary markets really started to hit, there was a phenomenon that happened. Not only did gold go to 850 and silver went to 50 and interest rates went to 20% and all that, and oil prices skyrocketed, but both white diamonds and colored diamonds skyrocketed during those times. In fact, the price of white diamonds and colored diamonds went up by 500% in 1979 and 80, and did as well as any strong commodity did, and that was primarily because of inflation and rising interest rates. Now, the fact is that even white diamonds went up 500%. It was a phenomenon that, when the prices started to skyrocket, just like is happening now, when the price of silver goes up as much as it does, then people say, well, gee, I've got this silver tea set that I don't use, and I've got these silver trays, and I've got this silver cutlery, and they take them to dealers and they sell them off. Well, the same thing happened in 1980 when white diamonds skyrocketed in price, and people that had white diamonds, because they're so plentiful, they started selling them into the market and taking huge profits out of the market, and the price consequently came all the way back down again. Colored diamonds, that they also went up 500%, but because there's so few colored diamonds, the prices never pulled back. But white diamonds did come all the way back down again. The reason that I'm bringing this up, there was a major show this week and last week in Basel, Switzerland. It was a big diamond show. And I had my representatives there, and they reported back to me that a couple things that were very interesting that were happening. Number one, there were very few yellow diamonds available anymore, and the ones that were there were at record prices. So basically what we accomplished by selling out the yellow flawless diamond market is really going to be a gigantic benefit to our clients, because there's hardly any of these diamonds around, and now the prices are skyrocketing in price. So that's one thing that's extremely exciting. But here's the most exciting news of all. White diamonds, because there's so many of them, they are listed on a Rappaport list. It's a price list called the Rappaport list, because Rappaport is a very big name in the white diamond market. So you can get a list of a Rappaport list, and it will tell you what a 1-carat H-colored VVS1 diamond is worth. It'll tell you what a D-flawless 3-carat diamond is worth, and so on. And the fact is that the price of white diamonds have crept up over the years, but they haven't done what colored diamonds have done. Well, all of a sudden, at this show in Basel this week, my reps called me and they said, Harold, we looked at these white diamonds. They were looking at specific white diamonds, and the Rappaport list was 50 to 90% higher than what the Rappaport list was. The price of these diamonds has increased by 50 to 90% in white diamonds. And this is the exact same thing that happened back in 1979 and 80. So, if we're going to head into these heavy inflationary markets and the price of diamonds are going to take off like they did in 79 and 80, we may be in this market for a very short period of time, because basically if white diamonds are going to increase, colored diamonds are going to go ballistic because there's so few of them available. So basically, what's happening now is that my clients, because of what we just discovered, are now starting to load up on these lower-priced yellow flawless diamonds. And basically, they'll be used as currency. A diamond that you could buy for $15,000 in 2 or 3 years from now could be worth $75,000. That's what happened in 1980. And again, if you don't learn from history, history always repeats itself. Now I've got clients buying diamonds like they're going out of style type of thing, because again, we know that we're heading towards heavy inflation. Oil's at 107. Food prices are skyrocketing. Metal